China's stock exchanges and central bank rushed to defend a falling yuan and stock markets on Monday. They tried to soothe investors concerned about Donald Trump's return to the White House and Beijing's ability to revive the economy. Trump's threats of big tariffs on Chinese imports have rattled the yuan. It's also driven mainland bond yields down and got stocks off to a difficult start this year. On Monday, China's yuan weakened to its lowest in 16 months. The blue-chip stock index CSI 300 touched its weakest since the end of September. Three sources also told Reuters China's stock exchanges asked large mutual funds to restrict their selling of stocks at the beginning of the year. They said at least 4 large mutual funds received calls from the Shanghai and Shenzhen stock exchanges recently. They were asked to ensure they bought more stocks than they sold each day. The Shanghai and Shenzhen stock exchanges said Sunday they recently met with foreign institutions. They assured investors they would continue to open up China's capital markets. One state-owned news outlet reported the People's Bank of China could issue more yuan bills in Hong Kong in January. It's a sign authorities want to absorb currency to calm speculation. The world's second biggest economy has struggled over the past few days due to a property downturn and slowing income. Exports were one of the few bright spots, but could face US tariffs under a second Trump administration. The yuan has routinely hit multi-month lows since Trump won the US election.
Japan's service firms enjoyed a festive end to the year. The sector expanded for a second straight month during December, according to figures out Monday. The closely watched services PMI from AU Jibun Bank rose to 50.9. That was a bit lower than an earlier preliminary reading, but still well above the key 50-point level that indicates rising activity. Firms were buoyed by solid demand. That saw a sub-index of new business rise for a 6th month, while employment was up for a 15th straight month. Firms said they were hiring more people in line with expansion plans. Business sentiment also stayed positive, with companies saying they were hopeful activity and demand will both grow over the coming year. The rate of inflation held at relatively high levels during the month, largely due to rising costs for labour and raw materials. That will bolster the chances of further rate hikes by the Bank of Japan. However, Bank Governor Kazuo Ueda has said he also needs to watch overseas developments, not least what Donald Trump does when he takes office in the US later in January. Volkswagen is deepening its ties with Chinese EV maker Xpeng. The pair said Monday that they would expand their partnership to build an ultra-fast charging network for electric cars. They will open their existing Chinese networks to each other's customers. That covers about 20,000 charging systems across 420 cities in the country. And they will explore joint construction of new co-branded sites. Xpeng and VW first formed a partnership in 2023. At the time, the German giant bought a stake of almost 5% in the Chinese firm for $700 million. The company said they would jointly launch 2 VW-branded EVs in China by 2026. Volkswagen later said it had worked with Xpeng to develop a new architecture for intelligent and electric cars. It said that would allow it to offer more affordable EVs in its biggest market.